Hey there, my name's Curtis Lucas, and you're watching Empire Building. So obviously I don't need to tell most of you, this was a pretty good week. As always, not all the Bitcoin mining stocks were treated equally, but they certainly have all had their own fair share of significant gains. One stock in particular that shined a little brighter than the rest was Riot Blockchain. And I've noticed that there's been some questions in the comments asking why is it that Riot seems to be outperforming Mara? Why is their stock so much higher when Mara has so many more miners planned to be delivered and so much more Bitcoin on their balance sheet? I'm going to answer that question in this video. So for starters, in my opinion, one of the catalysts that seemed to catapult the stock at an accelerated rate was the fact that they announced that Riot, for the first time, will pass 1 exahash in mining capacity. Now this is a pretty big milestone, and they have every reason to celebrate. At these prices, that means they'll be pulling in over $300,000 worth of Bitcoin every single day. Over $10 million worth of Bitcoin every single month. So it would seem that the announcement of meeting this milestone was something that the market awarded them for. To be honest, I was a little bit surprised that this might be the case, seeing as how all of this was announced quite some time ago and it was extremely well known that this was going to happen, or at least it should have been. Having said that, we did see that when all of these miners and the purchase of these miners had been announced, it led to nearly no move at all in the prices of any of these stocks. So I guess it stands to reason that if it didn't move the needle then it's kind of have to move the needle now. It seems that the market may be approaching this with the show me first attitude. If that's the case, Mara's got a little over 4,000 miners showing up at the end of this month, which will place them above Riot's capacity. And both of these companies are going to be receiving miners every single month throughout the balance of the year. But Riot got to that milestone first, so Riot gets the carrot. But to fully answer the question, why is Riot so much larger than Mara, I have to point out that it's actually not. The price of the stock might be higher than Mara, but that's pretty much irrelevant. I've pointed this out several times in the past that the stock price has no relevance in terms of price history or price discovery, resistances, or anything of that nature. This week, Riot also surpassed the former highs that it made back in 2017. But the stock prices back in 2017 are completely irrelevant to today's market. The number of shares outstanding in both of these companies is far greater than they were back in 2017. Of course, what actually matters is the market cap. The market cap being the apparent value of these companies by taking the price that the stock is currently trading at multiplied by the number of shares outstanding in that company. For Riot, that market cap brings it to $3.33 billion. And in the case of Mara, their market cap was $3.61 billion. Roughly $300 million more than Riot. So when you start hearing people talk about former prices, none of it means anything at all. If you were to look at the chart of the market cap throughout the history of these companies, the highs that were formed back in 2017 barely register on the chart. So you do well to just ignore all of that noise. It doesn't mean anything at all. So effectively speaking, as of this point, Riot and Mara are valued approximately the same. But another reason why I think the price movement in Riot was warranted was because Riot announced that they had appointed a new CEO. On the 8th of February, there was a press release where they announced that Jason Les will be taking on the position of CEO for Riot Blockchain. Now, back when I was researching Riot Blockchain as a company to invest in, I did a lot of looking into the company's past, which most of us are aware there was some complications and some shady business going on there. But everyone who's involved in those activities have not been at the company for a great deal amount of time, but I still did some checking up on who remained with the company. And Jason Les was one of the people who impressed me. I listened to him in some of the interviews that are still circulating around on YouTube. And it doesn't take long to realize that this is a guy who's the real deal. He knows what he's talking about.
And I think that's the difference between a lot of Bitcoin people and then, maybe other altcoins who think that cheap transactions, are the end all be all of what gives a cryptocurrency value. And like we must keep Bitcoin as cheap as possible to send, or it's going to fail. And while I agree that that's an important thing, and Bitcoin is achieving that, Bitcoin, for most notably through the Lightning Network, Bitcoin offers actually instant, not sitting in the mempool. We're gonna hope that transaction is okay. Definition of instant some people like to use, but Lightning offers cryptographically proven instant payments, for far sub penny prices. And so I think like working on those technologies and not sacrificing other valuable properties is important, because people could have like succumbed to the pressure. What if when Bitcoin fees were high in December, we decided community said, well, we got to do anything. We're jacking up the block size to a gigabyte just to get all these transactions. Okay, well, great. Transactions would be cheap, and there'd be a ton of consequences to doing so. So
he understands the intricacies of this technology, and he certainly has the relevant background, experience, and education to be able to identify opportunities in this sector that others might miss. So when I saw that they had made this move, I was extremely happy about this. Now, I wasn't necessarily sure if the market was really going to appreciate this, but I definitely took it as a signal that it's time to pay close attention, because Riot may start to make some serious moves here. They've been pretty quiet for quite some time. Other than the announcement of new miners that were coming, that we already knew were coming, they haven't really made any new moves. But suffice it to say, things are looking good right across the board. And the fact that Riot has essentially completely caught up to Mara in terms of market cap, and we know Mara is going to begin growing at an accelerated pace. While both will continue to do well, I wouldn't be chasing after Riot if you haven't already positioned yourself within that company. Now, I am by no means saying that if you are a holder of Riot Blockchain that you should sell your shares. If you're a trader, well, you're going to do that anyways. But if you're an investor holding for the long term and you believe in this company, then you've really got nothing to worry about. It's going to continue to perform extremely well. To my knowledge, there hasn't been any new filings or anything of the nature that would outline exactly what's going on with their coinment facility. I know I had expressed some concerns about that aspect of the business, so if anyone at Riot Blockchain is listening, it would really be helpful if there could be some updates on how that's going to develop in terms of servicing agreements with coinment. That facility has always impressed me, and it really has the ability to become a literal powerhouse, as once it's fully built out, it will be the single largest Bitcoin mine in the world. And it would seem primarily built out by Riot, even though the facility itself is run by Coinmint. But really, all in all, the move to promote Jason Les up to CEO definitely gets my seal of approval. So long as we're able to get a little bit more information on the current status of the agreements and some assurances that the balance of the miners that are set to arrive are in fact going to be added into the co-location agreement with Coinmint. Ideally in a long-term agreement, not something that's month to month. This is one of the reasons why I've always been hesitant to allocate a portion of my portfolio into Riot Blockchain. But speaking more generally, I've been very excited to see the price action in Bitcoin and Ethereum. Even though, with the exception of Hive, none of these blockchain companies mine Ethereum, Ethereum affects me in a pretty big way since I mine it myself. Throughout all of these videos, you can hear that distant hum in the background. That is my own miner running. I film in my garage, and that miner keeps this garage warm. Well, at least it used to. Here in Edmonton, we've reached temperatures sub negative 30 degrees for the last 2 weeks or so. It's been pretty brutal, and this miner has a hard time keeping up, so I got to run the furnace as well just to get it up to a temperature that I can actually record without freezing my ass off. This would also explain the incredible performance that Hive has been able to benefit from in recent days, while its share price surged over the last couple of days. While recording this, the price of Bitcoin has been trading between the range of 47,000 to 48,000 for quite some time now. It's been exhibiting that telltale ascending triangle consolidation pattern, which we've seen so many times in the past. In late Friday morning trading, when the price got squeezed, I took that as an opportunity to enter yet another speculative short-term options trade. I just could not help myself. I had a significant amount of money sitting on the sidelines just in case something like this might happen. So when it did, I had to jump on it. I picked up another 300 contracts expiring next Friday, and I went all out and selected a strike price of $60 for Mara. That would be an implied price increase of over 50%. Now, while that might seem unreasonable, it's certainly not out of the realm of possibility. And seeing as how we were facing a long weekend, after the windfall that I just benefited from, I was feeling a little bit more daring. My cost on those contracts was $24,000. So if the price goes in the opposite direction, then I stand to lose a significant amount of money. If that happens, I have no intention of holding on to these things to the bitter end like I did last time. I will sell and take the loss and look for the next move. I simply saw this as another asymmetric return profile. Risk $24,000, potentially gain 10 times that. And seeing as how my overall portfolio is worth nearly $2 million now, $24,000 is a relatively small percentage of my overall holdings. And as time goes on, I'm going to continue to use these wins to accumulate more and more actual shares. But really, in my opinion, there just doesn't seem to be very many things that can pull Bitcoin back at this point. None of the old tactics that used to be used work anymore. The mainstream media seems to be holding on to this last-ditch criticism of Bitcoin being risky. But the more and more institutions that purchase it, the less risky it's going to get. And really, when they say risky, what they mean is volatile. And yeah, they're right. When a price goes up 30% in a week, that's volatile. Doesn't mean it's bad, but it's volatile. People don't get into Bitcoin to have it do nothing. That's not the point. 20 to 30 years from now, it'll be boring and it'll do next to nothing as far as price action is concerned. It'll be established by that point. The point of getting in now is to benefit from that adoption curve. And it's going to be volatile. That's the nature of adoption. And the fact that money's on the line only makes it even more volatile. But if that's all they've got, there's just not enough there to make people afraid. But with President's Day come Monday in the United States and Family Day here in Canada, the markets will be completely closed until Tuesday morning. A lot can happen between now and then. I would not be surprised to see Bitcoin making new highs by Saturday morning, probably by the time I even upload this video. It is getting tightly squeezed between a smaller and smaller range between the top that it's formed at about just over $48,000, less than $49,000, and this ascending wedge that just keeps squeezing it until it has no choice but to go up. What's happening is we're forming an ascending floor. The lower base price for Bitcoin keeps getting pushed up as more and more hodlers enter the space. These hodlers are the institutional investors. When they buy, they lock up their Bitcoin, thereby reducing the supply on the open market. There's less and less for the traders to play with. And this squeezes the lower limit of that price higher and higher and higher until it gets squeezed up against its former upper resistance, until it just can't be held down any longer and we break through. And this process will repeat itself until there's just no more buying pressure to break through any longer. This is where we start to form those rapidly ascending prices that we witnessed back earlier in January. But honestly, I think this time will be even more insane. Last time, we didn't have the likes of Elon Musk, and who else knows who's coming next. I hate putting out price targets, but honestly, I can see us pushing through $100,000 Bitcoin by May, or at least by the end of May. There are 322 days left in 2021. If Bitcoin was only going to go to $100,000 within this year, that's only $164 a day, taken as an average. Obviously, nothing is going to go in a straight line like that. But that's also kind of my point. When the price movements happen, they are broad and rapid, followed by periods of consolidation. But how boring would Bitcoin have to be for it to only reach 100,000 by the end of this year? Everyone in this space would basically have to fall asleep. And considering the moves happen so rapid and over short periods of time, that means the rest of the year, Bitcoin is just going to do nothing at all. That is not how this kind of disruptive technology grabs a foothold. It does this through rapid adoption and rapid expansion. It's not like everyone's just going to be adults about this and be completely responsible. This is going to become extremely volatile. Bitcoin is going to carry that badge of honor for quite some time still. Throughout this entire week, I've had days where I made nearly $600,000. Twice. I've also had days where I've lost over $200,000. And I expect that's going to get a lot more extreme. But it's something I'm certainly at least starting to get used to. But as soon as that happens, prices launch yet even further, giving me something yet new to become accustomed to. By later this year, my account could be fluctuating by millions day by day. And that's something I never thought I'd ever have an opportunity to get used to. But I think I'll be able to handle it. How much do you think you'll be able to handle? Does it still scare you when the price drops? If you're a trader, have you had a whole lot of success buying and selling the stock? I know I don't always respond to all the comments, but I do read them all, and it gives me an idea of what everybody's thinking and really how to structure some of these videos to address some of the conversations that I see happening down there. So I encourage you to just keep that up. As for the options sort of crash course I talked about, I am planning on doing that soon, but I'll need a completely different setup in terms of hardware so I can do a screen capture. Recording videos in the house can get quite difficult. I do have 2 small children. It can get pretty hectic in there. It's COVID, so there's really nowhere else for anyone to go. That's why I record in the garage. So with some of my newfound wealth, I may need to use some of that to pick up some hardware so that I can properly record that type of video out here. And I'm going to need to do it during trading hours because I want to do this live. Not a live stream, but live trading while it's happening live during the market hours. So I expect I will do something like this probably next week when who knows what kind of crazy market activity might be happening while I'm doing it. But that might make for a pretty exciting video. Who knows? We'll see. But that's all for this one. Now let's get back to empire building.